Good morning, everybody. Good morning. Thank you for joining. Going to do a little money supply breakdown here. Bitcoin had a bit of a drop. Probably freaks a lot of people out. Crashing down to $115,000. $115,000 per Bitcoin. I do so many detailed charts sometimes that I know can be overwhelming and sort of perplexing to put it all together to see the whole picture sometimes. So sometimes I think it's just better to make something very simple and just look at it. Hopefully simple. So that's what we got here with this chart. I'm going to direct your attention to first what's right here, the monetary base. Okay, this is everything here that you see in this chart is in $1 trillion. Every circle is $1 trillion equivalent of value. All right, so this is a global money supply breakdown. Bitcoin is going to fit into this matrix somewhere. It's here. This is where it fits. It's what's called the monetary base, central bank money. For those of you that have been following my work for a long time, you know that I do a global survey of this, nearly global. The value is somewhere around 26.5, 27 trillion. We'll see by the end of this quarter, 27 trillion. Why does it say 22.6 here? Because I'm only going to isolate the top 7 currencies, the biggest ones in the world, just to make it simple, just to understand it. But for every number that you see here, for these 4 things, not the commodity money, but for every 4 here, you're going to see something that's like 80% of the total. It's roughly how this global money supply breaks down. All right. The Bitcoin system is comparable to this. It's not comparable to this, M1. It's not comparable to this, M3. It's comparable to this because this is core of the financial system money. It's what the central banks print around the world each and every day. If you look at the top 7 currencies, all right, so that's the dollar, the euro, the yen, the yuan, sterling, Indian rupee, and the Swiss franc. Add them together, you get a monetary base of $22.6 trillion equivalent. Dollars, 5.6 trillion of that. The euro is 5.1 trillion. The yen, 4.5 trillion. The yuan, rising fast, 5.1 trillion, very close to the dollar. It's number 2 actually here in this ranking. Sterling, 1.1 trillion. Indian rupee, 600 billion. Swiss franc, 600 billion. All right. Good morning, Fred. Thank you, sir. So this is the money supply that is going to be comparable with Bitcoin. All right. So when you see Bitcoin fall $5,000 and you're having some Malox problems, Malox moments, just know that we got a long way to go. We're still early. There's nothing to worry about. I've been posting some charts on this. All right. So physical cash, it's a subset of the monetary base. All right, so the monetary base is the entire central bank money supply. Only the central banks control it. When you talk about the printing press, it is the monetary base. It's not M1, it's not M3, it is the monetary base. A subset of that is the physical cash that we all know and stack under our mattresses, perhaps, or in our wallets, use at the bar, in grocery store tills. Maybe some crazy libertarians bury them in their backyard. I know plenty did during Y2K. That's 7.5 trillion of the top 7 currencies. If you add in the rest of the world, you're getting to about 9.5 trillion, 9.4, 9.5. So again, you're at 80% of the total with the top 7. I'm just showing you the top 7 here because I don't have a global picture for all these money supplies, so I'm just doing what I can do to show you consistency. Bitcoin is nearly bigger than any one of these. All right, it is bigger, in fact, than all of them but the dollar. The dollar at the moment is 2.4 trillion, roughly. Cash money, hard Benjamins, hard currencies. Hard currency, hard notes, coins. Coins are a little bit of this total, mostly notes. So that's great. Bitcoin is looking very good there. But still, we got a while to pass the top 7, which is 7.5 trillion in value. And the world would be something like 9.5 trillion in value in physical cash. Okay. I also get commodity money. I have 3 commodities here: gold, silver, and the synthetic commodity of Bitcoin. I'm being a bit charitable to gold. All right, this is available gold, roughly worth 20 trillion right now at today's prices, which have been booming over the last 2 years. However, the gold that's actually connected to the financial system directly, that's backing this money, and there is gold still to this day backing this money, all right? It's about 4 trillion. $4 trillion worth of gold, 1.2 billion ounces worth of gold. You take 1.15, 1.2 billion ounces of gold, multiply it by today's prices, we get $4 trillion. Good morning, Anders. Yes, no panic, no panic. Bitcoin crashing to 115. I know people are concerned. Here's Bitcoin, 2.3 trillion, and silver available, 1.2 trillion. None of that is in central banks. A lot of it is in silverware. A lot of this gold, by the way, is in jewelry. Right? About half of it, roughly 10 trillion. 4 trillion is in central banks. 6 is in other places. Private, bullion, vaults, ETFs. But money is a continuum, all right? It's moneyness, as Friedrich Hayek says. It's moneyness. It's not money. It's more of an adjective than a noun. Because another thing that people like to talk about is Bitcoin's going to take over the M1 money supply. First of all, let's define what it actually means. M1 is going to include this physical cash minus a small amount of physical cash that's in bank vaults, which is very small. It's like 5% of this. But most of the physical cash is going to be in M1. Plus demand deposits, the sacred demand deposit for the Austrian school, which in my opinion is not really that sacred, but this is how it goes. Anyway, let's add up the M1 money supply. That's 10 trillion for the US, 12 trillion for the euro, 7.6 trillion for the yen, 15.1 trillion for the yuan, 3 trillion for the pound sterling, 800 billion for the Swissy, 800 billion for the rupee. All right, you get a total of 50 trillion, 49.5 trillion. It's a nice metric, a nice target for Bitcoin, but Bitcoin will never catch this. It is impossible. By definition, this counts up bank deposits, not base money, which Bitcoin is. Bitcoin is base money. So Bitcoin will never catch this amount. Now we have M3. Notice I don't have M2. Everybody on Twitter likes to quote M2 because that's the only thing the Federal Reserve publishes. The Federal Reserve, since 2006, has not published M3 in the United States, so I've backwards compatibly calculated it for you, except for Eurodollars. Eurodollars is a very nebulous thing that it would include cash in, offshore accounts, things that are not managed by the Federal Reserve. It's harder to calculate. It's possible, but I haven't gotten my head around it yet. Even without that, M3 is 36.3 trillion in the United States. In Europe, 19 trillion. In Japan, 11.2 trillion. In China, and this is actually called M2 in China. They don't distinguish between M2 and M3. I'll distinguish it for you in a second. 45 trillion. Great Britain, this M3 is actually called M4. It's the broadest money supply. It's 4.2 trillion. In India, 3.3 trillion. Swissy, 1.4 trillion. Total, 120 trillion. Again, all of these numbers, these top four figures, are about 80% of the world. So, 150, 160 trillion, rounding errors here, is total M3 money. Bitcoin will never catch this amount. It will accrete more and more of it, but it will never catch it because, again, these are banking-like fiduciary media instruments. Bitcoin is the asset, the UTXO. It's the thing that you can hold, run your own node, buy some, withdraw from the exchange, just like you're holding an ounce of gold. That's what a Bitcoin UTXO is. But if you log into Revolut and you purchase Bitcoin and you just see Bitcoin on your phone, you're not holding that Bitcoin. Bitcoin is kind of a deposit-like agreement. So if you count up those deposits, it would go somewhere in M1 here. And M3 in the traditional system includes more exotic instruments, both for retail and institutional. All right, large time deposits, money market funds, repurchase agreements. So there's a lot of money worldwide. And the point is, I guess, say don't panic, because here's Bitcoin. 2.3 trillion in value today. I think it will pass the total monetary base somewhere in the late 2030s, early 2040s. I'll show you a chart if you want to see that. I think gold's going to go up as well. Right? All of this is just benchmarked to one idea, this idea of a dollar. Central banks are happy that their gold holdings are going up, except for the United States, which doesn't mark its gold holdings to market. Again, we could break this gold down in different ways, but only about 4 trillion, four of these dots, would be backing these dots, the monetary base. What's the difference between the monetary base and physical cash? Remember, I told you cash is a subset of the monetary base. It's one of the components. The other component is basically each bank's account with the central bank. It's a ledger entry. It's called the reserve account, bank reserves. There will be a third component if they ever do these CBDCs. That would be a third component of a monetary base. It would be base money, central bank money, but I project that's going to be dead on arrival too, especially we see the arrival of stable coins in the U.S. The banks, which are here running M3 and M1, they own the central banks, which run MB, monetary base. So banks aren't going to want to put their own interests behind that of the central bank, which they own anyway and manage anyway in each country. So I wouldn't worry too much about CBDCs at the moment, although they are very Orwellian instruments. So brass tacks. This is how global money looks. Don't think about loans or debt or interest rates or real estate. This is just a nicely tabulated money supply for you to see. This is actually the totals of each. And Bitcoin is going to accrete for sure 100% of this in probably 15 years. Maybe faster if they decide to hold more Bitcoin than gold. Central banks hold about $50 billion worth or 500,000 Bitcoin at the moment, so it's nothing. Maybe even less, I guess, from what we can understand. The U.S. doesn't have the coins that we thought they did. A lot of room to move here. We're early. Don't freak out. About $5,000 dips in the price in a day. You guys got questions? Let me know. We'll go to price charts here in a second. But this is the brass tacks global picture of the money supply based on the top 7 currencies in the world: Bitcoin, gold, and silver. And again, I don't have a full picture yet of these two money supplies in nice broken down, curves, but roughly add on another 20%. So get up to 150 trillion here, 60 trillion here, 27 trillion here, 9 trillion here, 9.5 trillion here. That would be the globe worldwide. But you can see it's very Pareto, right? Even with the top 7, 4 dominate the top 7. It's the same way if you expand it out and look at Brazilian reais or Argentine pesos or Russian rubles. Glorious country that is. So, let me know if you want me to come back to this. But that's where we are. That's where it fits. Bitcoin is all the way down here. Only 2 dots, 2 and change dots regarding the total money supply. Plenty of time. Plenty of time. All right. Let's switch over to some price charts. Let me know if you want me to come back to this. It's no problem if you do. I'm pulled into this model at 115,000. All right. The day before, we were at 118, 18. July 22nd, 120. So I'm sure that it's a little bit of heartburn for some folks. Let's look at the bands. 70th percentile, 80th percentile. All right. We're not nowhere near sort of nosebleed territory, which in my opinion would start here at 90 percentile. All right. Number 9. We're still hovering around number 7. So let's look at number 7. If we assume past is prologue, we're in November 2020 territory. All right, remember that when Bitcoin was bumping up to 20 grand while everybody was meme stock trading during the pandemic? Or we're in summer 2017 territory. SegWit 2x failed here. Bcash fork here. And SegWit activation here. Or back to the 2013 double top, we're hovering along, you know, the recovery when we were at $50, $60 Bitcoin. So, in my opinion, no reason to panic. I'll pull on a chart that shows the 90th and up, as I'm showing almost every day now, these ones. But again, 70th, 80th, 90th. These are definitely, you know, we're getting into exciting territories when you're in the 70th, 80th, and the 90th percentiles, okay, as you see here. But again, moving up till today, let's look at the last cycle until today. We're still hanging out at the number 7. All right, so these come quick. Notice how we went from 7 to 8 in a week in 2020, and from 8 to 9 in 2 weeks. And then you stay above 9 for usually 3 months. Doesn't mean it has to happen that way again this cycle, but I'm not going to try to get too cute with ideas here based on the numbers. All right, so let's look above 9 now for the fun, always. Okay, these are the very top percentile bands. 100's very unlikely, 99's unlikely, 98's unlikely, probably 97th, but I'll leave it. All right, we didn't hit the 97th percentile. That's number 7 on this chart in 2021, but we did in all prior cycles, as you see here. Again, this chart starts at number 9, the 90th percentile. In the other chart, still not close. Good morning, Roman. Yeah. Let me know if anybody's doing any strategies with options, treasury companies. I'm curious. It's probably pretty volatile right now. But panicking at 120K is just, in my opinion, not worth it. All right, let's go back. Let's go back. Likewise, my friend. Likewise. this is the target, right? It's this money supply. 10 times where we are now. It's this money supply. All right, each dot is a trillion. Bitcoin is just here. Plenty of time. Is not going back to the value of silver. We've completely destroyed silver over the last 2 cycles. All the silver in the world. Gold is also a target, of course. Another thing to say about this chart, remember, this is why Bitcoin is different. Bitcoin is like gold and silver because commodity money is an asset first. It's not a liability. All these other monies, supplies, all of them are liabilities first. Okay, so, and it doesn't mean, by the way, that you loan it into existence. That's not correct at all. You literally print it into existence. That's what they do. So ex nihilo, the central bank prints this money. They don't have to have anything else on their books. They don't have to have gold. They don't have to have Bitcoin. They just print it. Same with the bank reserves, which is added on. It gives you this total. And then the process repeats for the banks above them and the brokerages above them. It is not loaning into existence. It's literally just printing. That's the power that they have to do. So, but as a gauge of where Bitcoin can go, these are the money supplies that we would look at. Again, you're not going to catch M1, you're not going to catch M3, which is fine because those include fiduciary deposits from entities that are not the central bank, not the core of the system. This is core of the system money right here. You know, and then if you think about asset values like real estate, loans that banks have in their portfolio, all that stuff is on the asset side of a balance sheet of a lending institution. Those are in the hundreds of trillions, quadrillions of dollars. Huge, huge dollars. And I wouldn't bank on any of that. When you see all these charts about Bitcoins overtaking real estate, overtaking this, overtaking that, there's no reason to look at that. Just look at the money, stick with the money, and base your expectations there. Sounds perfectly logical, Sandro. Good morning. Very smart parents, as Anders says. Yeah, great move. Great move. A lot of people are getting excited about Bitcoin treasuries exploding during the next downturn. I gotta switch this back. Sorry. Let's go back here. Let's go here. So our friends at CoinKite with this. Still remains incredible that they have more than government's MicroStrategy. And I unfortunately haven't logged in. Rodolfo blocks these, but even if we look at, say, strategy, we can see that MNAV multiple, which is 1.68 for strategy at the moment. multipliers down here. Curious how you guys think that's going to go over time. This probably isn't indicative of good market price, right? Back in the early 2020s. But now we're rising. Even if coming back a bit. I mean, this is, everybody loves to talk about the possible failure of all these treasury companies. I mean, if the numbers get insane, I think they do kind of have a point, but anyway, I want to, I don't have this ready yet. It's going to take some time to get all the data together, but basically from here, we started to have the TradFi world get involved in shorting Bitcoin, literally here. All right, that's when the CME futures started, SIBO futures started. And as was just mentioned, when the ETF started at the start of last year, there's more ways to short this little run up. It was the beginning of the ETF world of Bitcoin. And now we have all these treasury companies, which can also be shorted. So it seems to me that this could be another possibility. Big top, then a big drop. Although it's not like super fast. It still took a year for this to happen, but kind of a controlled explosion and then a controlled implosion. I'm curious what you guys think, but I think probably these treasury companies combined with many puts on them, which will be coming in the next year, could add to that. I don't see a controlled rise here, like just along this curve. It seems too convenient. We get these Bart Simpsons a lot in Bitcoin right here, where it like goes up, then down, up, down, up, down. This shakes out so much money. Just these little dips. But once the badness of crowd starts, it's usually hard to stop in any market, really. All right, let's pull up some more on projections. I know I've been showing these for the past couple days, but let me know if you guys want to see a different one. Yeah, it totally seems like it. Anders, I completely agree. Markets just work that way. They work in these madness of crowds type scenarios. All right, so if we look at the market caps again, we go on log scale. This is linear scale, but log scale. All right. We see Bitcoin still looks different. The power. Let's just look at Bitcoin and gold. Yep. And I always like to say, when grandma at Thanksgiving, in the United States in particular, is talking about Bitcoin, then it's a little bit too much. People are scared though right now, Roman. We're only at $115,000 Bitcoin. 115,000. So here we're looking at market caps again. All right. Bitcoin's power curve. Very fast rates of growth, and then they fall. We're about 45% per year. Gold, over the last Peter Schiff 15 years, only 6.2% CAGR, although way ahead of trend. All right, so I just move into the trend in the future here. Way ahead of trend. This is interesting. It'll be interesting to see if gold sets a new trend, but until they do, I'm not going to change this. I'm just doing all these projections from when Bitcoin was born, basically. Look at US Treasuries. All right, it's a bit more than gold. This is the national debt of the United States. Bitcoin is going to pass this, same thing, early 2040s, late 2030s. Same with the base money, which is nearly the same size as the US debt. This is the same chart that I was talking about. This is global base money. Looking at that other table. All around 120 trillion. 120 to 150 trillion, depending on how you calculate all this stuff up. I think early 2040s, Bitcoin will surpass. Let me know if you guys want me to show a different one. Yes, it does. We have the God candles, those big green ones. Then we also get some ugly red ones. I wanted to point this out as well on my website just to show how liquid and deep Bitcoin remains. Yeah. What were you feeling this morning, Roman? Devil candle. Again, you can see this on my website. There's a top money supplies, but if we go down here, we have stocks, which again is not comparable to Bitcoin, but you can still compare the value. Look at the volume, put it in dollar terms, you get value of units traded. Bitcoin remains just incredibly liquid. All right, we're at $100 billion, and this is only spot. This is only spot. And if you compare the spot volume of all the other assets, you have Nvidia, which has been traded like mad over the last year. AI boom, year, 2 years basically. Tesla's now fallen out of the top 10. They also traded high as a percentage. But look at Bitcoin. As you look at percentage of, value of units traded daily, spot, Bitcoin is 4%. All the rest of these blue chip stocks are under 1%. huge hedge funds, pension funds, they're not going to trade stock. This is just how they hold value. These are huge buckets of value. If Bitcoin were a stock, it would be the sixth largest in the world. Excuse me. It's trading with Google right now. Very close. But massively liquid. 10 times the liquidity of other global stocks. The biggest, largest traded stocks in the world. And Saudi Aramco here, it's funny, they round to zero on trades. Nobody's trading that stock, but it's theoretically the 8th largest stock in the world. If you would sort of compound this, I'd be curious as well, because remember, Bitcoin trades 24/7, right? All these stocks do not. They trade 5 days a week. So you could extrapolate these numbers over a year and understand, add on those extra 2 days a week and count up that liquidity. There's nothing like it. There's nothing like it in the world. And I remember it was only, 2017 when Bitcoin hit $1 billion in global trading volume. 2018. It's come a long way to be 100x that. So this is another chart that I want to work on. I mean, this is a nice table here to summarize it for you. Again, you can find it on my website, but think about if we actually, you could count up the top 10 stocks and add their total liquidity for a year, and Bitcoin would probably be higher than all of them, because Bitcoin is 10 times any one stock here. Bitcoin trades 7 days a week. These all trade 5 days a week. So nothing to worry about. Don't worry about market manipulation, as they say. You have breakdown of gold, silver, gold and central banks. As I told you, it's about $4 trillion at the moment. You can see all this on my website. Shameless plug again. I'm the anti-newsletter. So if you want to support me, my BTC Pay is right there. You can contribute in Bitcoin, on-chain, Lightning. No subscriptions, just charts and data. Let me know what you guys think. If you want to chat about anything else. Here's another one as far as valuation metrics. Okay, so I showed this before. These little hashes here are actual daily price change value. Okay, so you see here 11th of November, 88,000, and then you see that actual daily says 8,342. That means the price went up $8,000 overnight, or at midnight UTC, compared to midnight the day before. Of course, it goes down a lot, and negative on log scale doesn't plot, so there's like these kind of hashes. When it goes down, you just don't see it plotted on the chart. What you can see is, obviously, when we get to the major bulls, then these hashes go up with the price, right? Obviously. So what we can do with the power trend, which Bitcoin follows, is let's look at the trend line daily change. Okay, it's very low at the moment, $100. All right, so this black line goes up $100 a day at the moment. All right, so we always trade ahead of the actual trend. As you see, most of the time we're way above this purple line, number one. I'm gonna take off the curve itself just so you can look at these changes. These are changes in price a day. All right, the monthly forms a bit of a band now. So the monthly change in that black line, the trend, at the moment is 3,000. All right, $100 a day, 3,000 a month. And what it interestingly does is forms kind of a channel around the daily price changes itself. But it's kind of, I think, a good top, not top, but when we're overheating, is when we get above the monthly change consistently on the daily, right? And consistently is kind of a rough indicator because, again, price can go down day to day. But when you're having these green hashes poke above, again, that's the daily actual price change in dollar terms. Compare that to what the monthly change of the trend is. We're getting a little bit hot, all right? And then if you look at the 3-month trend, it seems to be a really big of a top signal. So we started to hit that a bunch in 2021. And if you look today, we have not really gotten over this 3-month at all. A little bit here this day. There. You see the price changed on 11th of November 2024. This was post-Trump election euphoria. The price moved up $8,000. The trend line changed for 3 months. That means how that black line, the nice smooth black power curve, would go up. Would usually take 3 months to go up 7,000. All right, so that's, again, shows you that we can, when we're carrying that much future into a daily change, you need to be careful. That's when tops start to occur. But we're not there yet. Not at all. I don't see it here. I mean, I see it here in 2021, but I do not see it here in 2025. So it's something else I'm keeping an eye on. Yeah, they should do it. They should do it. I mean, Europe's got to do everything they can to stop being such a regressive, progressive, overregulated swamp. I know UK is out of Europe now, so to speak, but they should definitely do it. I'll show you guys the PSR update. Remember, that's price to sales. Again, just to see, these are just fundamental metrics to see if we're overvalued, undervalued, where we sit. All right, so we can do a PSR with Bitcoin. No problem, Roland. Okay, so PSR is the log scale on the right to multiple. Market cap over revenue on the left. Bitcoin has a huge multiple of market cap over the revenue that miners actually make. And that number grows, which is fine. That's just how the market has played itself out. All right, if I zoom in here, there's a little pickaxe here at the bottom of the chart. You can barely see the dark green, right? If I took this off, it would grow. Now you can see it. But this is very, it's a smooth number and it's very, doesn't grow too dramatically each cycle. What you see here is the total revenue rolled over a trailing 12-month basis that miners make at any given time. All right, so from July 2024 to July 2025, if miners took every single coin that they minted into the Bitcoin protocol, plus the fees that they earned, turned that into dollars, there's $14.8 billion in revenue. It's not that much, actually, compared to a market cap, which is 2.3 trillion. This is just how the economics of it work out. It's not a problem that it's such a big number, but what we can do is we can look at the size of this discrepancy over time and put a ratio. All right, so that's this ratio here. Zoom in. When you get to these points, these are tops in prices and tops in the market cap. All right, so this was obviously called the top in 2017, called the first top, interestingly, in 2021. And the number continues to rise. So that's kind of the weird thing. So you put these bands to sort of see where we are relatively. All right, so when you get to the red, you're at a topping area. We are not there. Based on this multiple, based on the trajectory, based on the trends, based on the history, I think a topping or a, unsustainable boom for the short term of Bitcoin, let's call it, would be somewhere around 300x market cap versus the revenue that miners make over trailing 12 months. Right now, we're only at 161x. So again, just trying to settle the stomach. I'm going to put some other multiples up. Just give me a second. All right. So for those of you just joining, why do I like the power curve so much for Bitcoin? This chart goes out to 2050. Let me show you the all-time power trend, all right? It's right there. It's a nice, beautiful curve, 96% R squared. I use this a lot in my modeling. Slices through the price very nicely as Bitcoin has been adopted. It's a good trend. Now let's imagine, so to draw this line, I need every bit of data, all right? 6,000 plus days of pricing data. It's all in here. But let's imagine I stopped somewhere here at the end of 2016 and only took the pricing data up to 2016. So that is 2010, Bitcoin Pizza Day 2010, December 22nd, 2010. Sorry, May 22nd, 2010 is when I start my pricing data here. May 22nd, 2010. To December 2016. And then I project out the regression. How would the trend line look? I'm going to draw it right now. Did you see it? I'll have to zoom in to show you. But if I zoom in, zoom in, zoom in, zoom in. This is why the power trend is an amazing chart. Sorry, an amazing metric to value and sort of undergird our understanding of Bitcoin. What is actually happening with the adoption of Bitcoin? It's incredibly predictable. And other networks, cities, things that become adopted over time, they grow in power. So it sort of validates that, right? To be clear, the black line here on this chart is every single day's worth of data running a regression. All right, it gives you, this is not trading view, drawing lines on a chart. This is just the regression, mathematical formula. The dotted line is number 3. That's if we did the regression from 2016 and then extend it out. You can see if you zoom out, it's almost identical. It's unbelievable. Really is an unbelievable relationship. All right. Now let's compare. Let's say some people like to say Bitcoin is exponential. People say it all the time. People I agree with, people I don't agree with about Bitcoin. Bitcoin is not an exponential asset. All right, exponential would be a straight line on log scale. Let's run let's shoehorn an exponential trend line onto Bitcoin. There's an exponential trend line in green. How is this a good trend if it hasn't hit the Bitcoin price since April 2022? And if you look back at the beginning, it didn't hit any of the early price. It's clearly not what's Bitcoin. That's not what Bitcoin is doing. Bitcoin is doing the black line. It's trending on the black line. It has nothing to do with the green line. You can also see it in the tooltip, 86% R squared. It's actually not a terrible fit, but it's not nearly as good as a 96% R squared. Let's look at the projections out to the end of this year. Let's even go mid next year, 2026. The power curve tells us about $150,000 Bitcoin a year from now. Whether you measured it all time, number 2, or even back from 2016, which is just incredible. And then an exponential trend. If Bitcoin grew exponentially like stocks, Bitcoin would be a 1.13 million. I have no doubt that Bitcoin will get to 1.13 million, but it's not going to happen exponentially. It's going to happen in power. It's going to proportionately grow this way over time. Let's look at another famous Bitcoin projection. This would be the stock to flow model. Let's look at Plan B's 2020 stock to flow model. Doesn't hold. All right. He uses a power curve, by the way, but it's sort of a ham-fisted way to draw a power curve because he's using exponential assets like gold and silver to plug into his coefficients. So anyway, you get to something that's more close to the exponential. It's way off. So he comes back to his 2019 model, which was his first one. This one looks a little bit better. But again, I don't really see the point of drawing something that can be way off the peaks and the troughs over years than just very simply sticking to one trend that will adjust every day. And this one does adjust every day. All right, so right now we're in the very privileged position to see our potential Bitcoin valuation rise because we're above the black line. So every day we paint a new value above this black line, we will pull up our future valuation of Bitcoin. And in a nutshell, if you haven't seen my work before, that is what's happening. Let me know, guys, if you want to look at something else. Bitcoin is these two dots on this chart of many, many trillions of dollars of currency units. There's plenty of time for us to absorb into all of this chart. And again, central banks only hold about 4 of these dots in gold. All right, 4 trillion would be backing what they call the monetary base or their central bank money here. This, and this, all 4 of these money supplies, which are fiduciary or fiat money supplies, are all liabilities. These are assets. No problem, Sandro. All the best. Good luck with the biz and everything. Have a great weekend to you as well. Thanks for checking in. Let's go back to our projection chart here. Remember, as I mentioned in the charts that I posted, like it's like a hockey analogy, right? Like you have to skate to the puck. The puck, like this is a snapshot today in 2025, but if we look based on exponential growth 5 years from now, 10 years from now, all of these are going to be much bigger, including Bitcoin. It's just how it's going to work. So let's go back again to this chart where I'm comparing Bitcoin with the monetary base and gold and silver together. I'm going to actually print out the different chart here. Where's the ultimate? Oh, whatever. All right, 1 second. All right, let's go back to this one. So this is just that central bank fiat money, 26 trillion at the moment, all right, globally. They're both going to grow, right? Since 2008, government money has been growing at a rate of 8.2% per year. It's actually about 10.2% over 50 years. So it's actually slightly down from the exact moment of Bitcoin's birth, which is kind of interesting. And also because of a big decrease in the money supply here after the pandemic. So here's the trend, right? And here's the actual way low. But anyway, if we grow this out at an 8.2% compound growth per year, it's exponential asset, not like Bitcoin. Right? Again, you get to this thing where I think late 2030s, early 2040s is a value that Bitcoin will catch up with. And in this case, they'll cross at 115 trillion. Gold will be faster. We'll pass gold, the $20 trillion, even within the next 10 years. And if you took gold and fiat money together, it'd be a little bit longer. Maybe here, somewhere around 150 trillion. I'm adding both the lines now. So again, money supplies are kind of weird if you think like that. It's you got to skate to where the puck is going. It's not going to happen. Hyper Bitcoinization today, it's just not going to happen. So the long and short is be calm, hodl. If you want to trade a little bit during these peaks, go for it. But this is a generational type of money that's coming in and going to replace fiat. Good morning, Alvaro. No, I didn't catch it yet, but as for Apple, not S&P 500, I don't have a chart of the S&P 500 market cap. I have, of course, the S&P 500 index, but that's different from the market cap. But yeah, there are a few stocks, and we can put Apple here now, that at least because of their current trajectory actually can outpace Bitcoin. So I think that's interesting. I'm not saying it's going to happen. There are only a few. It's Apple, Microsoft, Amazon, probably NVIDIA. But it's just an observation. It's not saying that that's going to happen. If you look at any other stock that is smaller than those, Bitcoin, even with its gradual, sustainable, descending rate of growth, right? Decelerating rate of growth, can take care of all of those assets, all of those values, those stock values. But it can't actually with Apple at the moment, because Apple is a huge company, all right? And it's growing at 23% per year from 2008, which is pretty mind-boggling. But it doesn't mean it's going to keep up at that pace for sure. I would like to get an S&P 500 valuation, but I just don't have it at the moment. There we'd be at hundreds of trillions of dollars, and the growth rate would be flatter than Apple for sure. Yeah, Apple price and Bitcoin would be interesting. I'll put it together. It will absorb. It will absorb everything in the financial system. We will get to a SATS standard for sure. You can put in, look at even U.S. Treasuries, right? People talk about how crazy the U.S. Treasury, like this is just national debt of the United States. Okay, so it just grows very consistently. Since 2008, it grows at a rate of 7.3% per year. This is the United States debt. Log scale, 36 trillion. You do a simple projection, a simple exponential regression, 98% R squared. Bitcoin has no problem catching it, but it will be, again, early 2040s. No problem, sir. Thanks for checking in. Appreciate it. And if you just think conceptually what's happening here, obviously Bitcoin is overtaking everything in value. But it's doing it in a weird way, right? You have to admit it's a weird thing. Like let's take out Apple, let's just look at gold and base money. You know, all these things move in straight lines on log scale, different trajectories. Gold's even slower, right? Even though it's way high over trend at the moment. It could put in a higher trend, but we just have to wait and see. Bitcoin doesn't grow that way. Bitcoin grows in power, it grows in this nice, sustainable, smooth line. So what I've been saying a lot on my streams, I'm curious how this is going to work, is debt. The reason that, let's just take something like the national debt, the reason that it grows exponentially is because it's a factor of the same interest rate that is charged on it every year. You have more and more interest, more and more debt. The compounding function, it's a straight line on log scale. But Bitcoin doesn't have, just naturally we can observe it, doesn't have that function. So one of two things will have to happen. Either one, TradFi, which in this graph is represented by the US Treasury market, will have to turn into a power curve like Bitcoin. Or two, Bitcoin will have to turn into an exponential curve like the Treasury market. I think Bitcoin will be fine in either scenario, but one has to admit if all markets move into this gently sloping power curve, you can't calculate interest the way that traditionally it was done. You just can't. So it's an interesting sort of, it's philosophical at this point. We got to wait 20 years to see how all this shakes out. But that's what I'm looking at. And again, if you want a mathematical proof or idea to understand what's really happening, go to my website. I only got one tab up for charts right now, but you got the power curve here for you to see on my website. Remember, a power curve on log scale is a straight line. Sorry. On log scale, it's this gently sloping concave down curve. On log, it's a straight line. All right, so it's different than exponential. And it's a beautiful, powerful, this is sort of a chart that people say they can't unsee once you see the straight line in log scale. All right, but what does it mean in practice? Go to this table. I have the power curve. All right, I'm plotting it out on a table, and I'm taking multiples of 2. All right, so how long does the curve take to double? If it was exponential growth, if Bitcoin was an exponential asset, a geometric compounding exponential asset like everything else in the financial world, the time to double would be equal. This column, time to double, would be equal. But as we see, actually, I guess this column is increase in time to double. It increases. It gradually takes a little bit longer. Bitcoin gets a little bit heavier as it scales and grows, and it takes a little bit longer to double. So we were doubling every 0.2 years back in the old days. Now we're right about here. We're doubling every 1.7 to 1.9 years. Right? We're actually in. This is arbitrary. You pick any point on the curve, but it's closer to 2 years. We're doubling every 2 years at the moment, 45% per year. But what does remain constant in a power relationship is this increase in time to double as a percentage of time. So basically what it means is the long and short of all of this math is Bitcoin will double for every 12.7 additional days in the life of the network. So 12.7% of the network back in the old days was only 64 days. Now, 12.7 days in the life of the network is 700 days. 6,000 days total, roughly 700. It comes from the line before. So 5,500 was the base. Then you add another 700 and 6,000. That's 12.7%. Same thing here. Start at this base roughly. This is, February 2026. It will be 6,249 days. Add another 795 days. That's 12.7%. So you get this fixed number is here. And that's how Bitcoin works. Yeah. Interest converging to zero due to price of storage. It's a similar idea, I guess. Everybody's talking about how there's less and less sats that are going to be available. I'm not sure I would exactly call it the price of storage, but we're all going to agree on the same conclusion anyway. Bitcoin's going to be a superior money to transact with. But the traditional way to calculate interest changes under a Bitcoin standard. That's the key thing. I'm representing these in terms of dollars, right? Dollars relative sort of units. At some point here, we'll start thinking in terms of sats. And then once you start thinking in terms of sats, the assumption is that as there are fewer stats coming out every 10 minutes, you can't charge a fixed rate of interest. That's basically where I'm at. These are fixed rates of interest, right? And if there's not enough money to pay the interest, you just print more money. That's how it works. I'm not saying it's a system I agree with. I'm just saying that's how the system works. Oh, sorry, I got this yet. To clarify, people would be okay with zero interest because they wouldn't have to be concerned about storing BTC. Yeah, that's totally fine. Fine way to put it. Trying to think what else I can show on the stream today, guys. I have a couple in mind, but I'm thinking. But in the meantime, just again to remind, like the puck is going to keep moving. Right? They're still going to try, no matter how much the United States Congress bluffs themselves into talking about how they're going to somehow shrink this deficit. They're not going to shrink it. I try to start at 9 a.m. London time. 9 a.m. London. It's 11 o'clock in the morning Riga time. What was I just saying? I always lose my train of thought. I was just going to pull up something and I blanked. Anyway, I'll think of it in a second. We're talking about price, talking about cost of interest. Oh, maybe I was going to just talk about the SATS standard. You know, oh, I know. I was going to show you a chart of the federal government of the United States and how much the Federal Reserve owns of that debt. So clearly, they're not going to give up control of the money supply easy. And they're going to try to do everything they can to, keep on it. And that may indeed at some point be reserving Bitcoin. That may be. So give me a second. I'll pull this up. I've shown this past couple days, but it's a helpful chart. All right, so if you just look at the central bank versus, this is the United States total debt, linear scale. First of all, let's go back to the 20s. The United States had a bunch of debt, had nothing to do with the Federal Reserve. All right. Here's the holdings of the central bank in dollar terms. Percentage-wise, very, very small, actually. Popped up during the Great Depression, popped up during World War II. But now, if you look at this over the long, long scale, Federal Reserve has become ever more a holder of United States debt. Right? And I would submit to you that they can continue to do this for quite a while. They're already down from the high. All right, so here, the worst of the days in the sort of gold standard era was getting up to 15%, 17%. And once the United States freed themselves from gold in the 1970s, they actually had more debt, and this percentage fell relative to how much the Federal Reserve owned. Then if you go to till today, the financial crisis, this is bailouts of corporations, by the way. They were switching federal United States Treasury paper for corporate paper for a time. Anyway, QE1, 2, 3. This is the asset side of their balance sheet. It's basically the mirror image of the monetary base. They peaked out here in 2021, 28%. So at that time, total U.S. federal debt, total U.S. Treasuries tradable, 29.6 trillion. Fed owned 27.9% of it. It's down now. Trump is mad. Trump wants more printing. Trump wants lower interest rates, and they'll get it. They'll get it. No doubt in my mind that he'll get what he wants. Presidents always get the monetary policy that they want. So this is just long and short. It's bullish. It's going to be bullish for Bitcoin. I'm not a fan of money printing. I'm not saying it has to happen for Bitcoin to succeed. But this is just a visual representation of how this game can go on for a lot longer than we think. And I wouldn't rely on, the bombast. I wouldn't rely on saying that the currency is going to collapse tomorrow. Remember, the dollar's the best looking horse in the glue factory. We got Russian rubles, disaster economy trying to do imperial stuff. You got Chinese yuan, who nobody wants to carry. You got all the Latin currencies. Of course, they're all going to go into Bitcoin. They will go into Bitcoin eventually, but it's going to go a lot longer than we think. Good thought. Good evening, Tim. Good evening to you. So, another thing is if you look at the holders of the foreign holders of treasuries, that's down. That's it peaked out here at 35%. That's a pain point for the dollar. That's true. It's true. It doesn't mean that the Federal Reserve can't make it up. But I'm curious to see how this chart evolves after a few months, after Liberation Day, to see if foreigners really want to keep buying treasuries. But again, the point, after $5,000 or $3,000 daily red candles, the point for me is just to try to, and I do this for myself, guys, is just to think about where we are in the grand scheme. We got a long way to go. Nothing to worry about. All right. Even though Bitcoin is nearly bigger than any one currency's physical cash stock, that's like the cash money, almost bigger than the dollar, but bigger than everything else. All right. Yuan, euros, francs, rupees, only a couple hundred billion. Dollars, 2.4 trillion in physical. In totality, Bitcoin still has to catch that. And remember, this is only top 7 currencies, so we got to get up to like 9 trillion globally. 9.5, really. Bitcoin's here. Only 2 dots and change. So to pass physical cash in the world, we got to get up to 10 dots. And they're going to keep inflating as time goes on. So that's kind of the way I'm thinking about it. I'm just trying to remind people that the puck's going to keep going. You got to skate to where the puck is going, which is simple. We're lucky. We're super lucky to have Bitcoin. We just buy Bitcoin and eventually we'll get there. You guys want to see anything else? For those that have just joined, I go back to the chart on price. And every 10th. I'm pretty confident that we're not going to boom out until we're above the 90th. That is number 9 here. That's the top red line on this. All right. We've done it in all prior cycles. It's not very long, only a couple months. but we're only at number 7. But it comes quick. It comes quick. FOMO happens. And sometimes it makes sense to go back to the old HODL doctrine, right? They can only take your Bitcoin if you sell. So it's very hard to sell at these prices. I mean, again, not financial advice, but it's very hard to sell Bitcoin here because you keep thinking it might go higher. Personally, from all the charts that I've showed you, the huge money supplies, we could look at the volume of FedWire, which is $2 quadrillion compared to Bitcoin, which is $7 trillion a year. That's 1,000 trillion for the Federal Reserve. Actually, it's 1,100 trillion for the Federal Reserve versus 7 trillion for Bitcoin, dollar equivalent. It's just, I don't think it's ready yet. So I wouldn't get too FOMO one way or the other. But yeah, even though I have these charts and I think about, maybe if I would want to lighten up or quality of life, buy something if my Bitcoin rises to these levels, it's always hard. So I can't tell anybody what to do for sure. HODL is good enough doctrine. But you might have to live through, 70% drawdown. And Peter Zion declaring it dead again on Joe Rogan's podcast. $1,000 overvalued. $17,000 overvalued when it's $16,000. You can find a lot of this data on my website. Not every chart, just so you guys know. Again, it's some of these compile automatically. Some I do the morning of before stream. I'm talking about these charts. But on my website, you still have some interactive stuff. You can see Bitcoin here. We got our podcast info. But that's basically what I'm trying to do here. Yeah, but it comes quick, Roman. We got, you had to wait bumping up along the 7 for a month. Then it came in a week to get to number 8 in 2020, and 2 weeks to get to number 9, or 3 weeks in 2021. Some choppiness here as well in 2017. But yeah, we're far. We're plenty far from, in my opinion, absolute silly season starts at number 9. So if you are still accumulating, I think it's totally fine. Again, never financial advice. Yes, Hello, Dominic. Good buying opportunity. Roman again to keep up the hopium. But yes, I agree. I don't think there's long left now. Yeah, I mean, I agree with you. Yes, Alvaro, they are lower, but they're also getting more in line with the black line itself. So you see, really, the only extreme moves were in 2011 and 2013. You see where these ribbons go high. So here's the absolute extremes based on multiples. These are just based on multiples around the trend. So this black line is all time. It didn't exist at the time. You have to sort of imagine it. I'm not showing the evolving, but there's a black line in the middle. It's kind of around the actual price at the time. It's growing fast. It's setting a base. We don't know where the power trend is. We don't even know Bitcoin's doing a power trend at this point. Trololo from Bitcoin Talk was thinking it was logarithmic, which is a slightly different form of growth than power. Here, I started to follow him in that here at this point, and then I started to do the chart here on the power curve. But anyway, you can see that from 2016, these look pretty smooth. It doesn't mean it won't be smooth in the future, or will be smooth in the future. But I think from here on out, it looks pretty good. Looks pretty good. But these are the extreme bands, right? So I honestly don't think these multiples. That is, this is around the trend. All right. So just so you can understand again, this chart. The best Bitcoin has ever done over the trend is 7.8x the trend. That would be $844,000 Bitcoin a day. The worst it's ever done, going back to 2011, 2010, is 0.1x the trend, or 13K Bitcoin. It's not going back. In my opinion, these are actually way extremes. They're not happening. If you look at the 10th and the 90th, it looks much better. It looks much more sort of accurate as a channel. And again, this is math, guys. This is not trading view. This is hard math behind these figures. Hi, Dominic. By the end of the year, we have about here. Trend's going to, oops, sorry, that's 2 years out. About here. Trend is 125K. And I do think a 90th is achievable. So that's 250K, 2x the trend, and then somewhere between 2 and 3x, in my view, would be the top. I have a different chart which shows the top 90th percentile bands, and just using a simple number like multiple over trend, I think if the trend is telling us 125K, then I think 2 to 3x that number by the end of the year. So 250 to 375K. Could be higher. Do you mean, Alvaro, I'm trying to understand what you mean here. If you go to 2021 and then you stop calculating, or how do you mean? Because this would be what the 90th percentile was in 2021 as it evolved. It passed it. Not sure. This is the evolved. I mean, this literally is what the 90th was at the time in 2021. We were above it, 2x the trend. Right, but that's not what the chart is showing. The chart is accounting for all of the data, uh, which is why I think it's more accurate. If we stopped calculating from 2021, yes, it would be uh, that line would be skewed higher today. But I don't want to mess with different uh, different calculations. Basically, I'd rather take everything as it evolved over time, and to me, it's a pretty handy way to at least view where we are. I think between the 10th and the 90th. Let me know if you have more questions there. Up to you, John. I mean, I always used to tell people $100 a day. I've been saying that for a long time. Um, if you assume that this power trend is the way that Bitcoin grows, which I would submit to you that it is, we're right at fair value. Okay, a little bit above fair value. Remember, this is not like a moving average or something like this. This is a very strong mathematical trend. And this 96% R squared says that the price, moves around the black line 96% better than it would move around the average price, which is obvious because the average price would be way lower than the current. But that's actually what R squared means. So it moves around the black line 96% better than the average. So it's a very good relationship. It's a good fit. But it's whatever you can do for sure. Yeah, I'm reading what you're saying, Alvaro, but why would I want to look at it that way? I would want I would want to have all of the data come in. I would want to pull this trend line lower because that's how the data is shaking out. Why would I want to ignore all the data from 2021 until today? But the 90th percentile back here did take into account everything before. Just like the 90th percentile here did take into account everything before. So, what I do agree with is that you can clearly see that the tops are more muted each time, right? I mean, these are big booms, big booms, big booms. So, as a multiple, which is I'm doing it, we're just we're coming down. It's totally possible that we don't hit the 90th. Totally possible. But we haven't had that happen yet. So I wouldn't try to change the math to say that we're not going to hit the 90th because we still hit the 90th here. We still hit it here and here and here. And we had all, prior down cycles that pulled it down. If I'm understanding you correctly. Yep, Dominic, good point. DCA is a great way to do it. We are absolutely going to have excessive leverage. I think, Tim, if you look at this, oops, not this, but, you know, great website here, friends at CoinKite. You can see all the Bitcoin treasuries, and this will be a part of the story of the deleveraging, no doubt, because these stocks will be able to be shorted. People won't believe the valuations. You got to log in to see the metrics, but hold on, Alvaro, I'm reading your message. Yeah, I'm sorry, Alvaro. Uh, I'm not hearing your point. I'm just not. This is uh, this is a complete data with all the chart evolved at the time. This 90th percentile here in March 2021 is the 90th percentile as of March 2021. It's not looking into the future. It evolves. No problem, John. Yeah. So what I want to do, and if you go back to the chart on, um, if you go back to the chart here, the table, is this is only spot, right? And as I've established, we're 10x the trading value of blue chip stocks in Bitcoin, and this is only spot at 93 billion a day. Remember, this number can get up to like 150 billion, by the way. If we add on the volume of strategy, Metaplanet, and then all of the ETFs, all the cash options, that's a huge number. I don't have it together. I'm trying to work for it. And even I think Glassnode and some of these entities don't have it exactly the way I'd like to look at it. But you're talking big liquidity, big liquidity that can swing a lot. So the volatility will be there. I totally believe the volatility is coming. You know, they have that. I should ask Gemini just to show you how many stuck. So here's one from Gemini about majority of stock market gains, number and percentage of trading days in a given year that were required to achieve at least 50% of the S&P's total annual gains. 1 day in 75. I don't know why this chart's just cutting me off in 1989, but it's a few days. It's a few days a year. And with Bitcoin, I think it's just going to be juiced up well beyond that. I mean, I like the idea of, you know, lifestyle, taking some profits. You know, I've been through a few of these cycles, but for sure, I can tell you guys, it's hard to part with those coins, and it's hard to think that you might never be able to buy at that value again, even though every single cycle has shown us that we could have. Right? Major discounts for a year to 2 years after. I recall in 2017, people wanting uh, a nice, right here, when this was starting to build up, people wanting sort of a nice, sustainable growth of Bitcoin. I recall people saying that. And then we see what happened. It is true we have more instruments that you can short right now to hedge. So that's an argument that we could go more sustainable. Oh, sorry. Right. Congrats, John. Congrats to you. Hodl on. I like it, Dominic. I like it. So, just reminding people, in case no one saw that, I guess this guy is maybe not even in Bitcoin anymore. I remember hearing it's kind of wild, but he was drunk and he started the hodl meme. Where is the it's a funny read just in general, but where's the actual hodl? I guess it's just the title. Forgot already myself. It's just the title. He says holding here. Correctly spelled it here. But that's the old hodling meme. But it's a good point right here. In a zero sum game such as this, traders can only take your money if you sell. It's true. Trading is zero sum, so you got to be careful. I mean, it's subjective value. Someone's measuring the cash more than the Bitcoin when they sell, and someone's measuring the Bitcoin more than the cash when they buy. It's true that both parties are benefiting, but over the long term, especially with Bitcoin, usually the value of that trade, Bitcoin's going to be much higher than it was before. Uh, which exchange? Do you want to tell us? Which wallet? Which exchange? Which app? Alvaro, this library for the charts is high charts. It's called high charts. Um, the data is pulled in using node.js, and I'm just locally hosting it. I've actually, for all these, I'm not using Python or anything. I calculate it all manually in Excel. So this is a power function. It's a power regression, and these are percentile bands on the multiple over trend. So, but you can use Python to code these things up and see different things. Kraken's great. Great exchange. Uh, another argument that you don't have the big drops is obviously we're in the big boys as far as liquid stocks, but again, we trade way more than liquid stocks, 10 times any one stock per day. All right, as a percentage of market cap. Also, another thing about the tops, which are difficult, we can look at Apple here. So here's the same analysis with Apple. First of all, Apple moves in exponential, not in power. All right. And I was trying to find a good trend with Apple. Obviously, they started to trend here in the 2000s. So I did a trend on that exponential. It's up here. Take this trend off. And with something like Apple, which is, it's on a different type of a trend than Bitcoin at the moment. It's true you could have waited, here in 2012, sold at $20. This is split adjusted, by the way. You'd have to wait 2 years for it to come back up, or here in 2008, $5 went huge discount during the crisis, and then getting back to $5 would take another year. But it's hard, if you have a run like this, right? You just keep running up against some of these higher bands. You could think, oh, this is coming down, it's going to sell. Then you're screwed because Apple just keeps going up. But Apple is moving exponential. It's a different type of a curve. What is easiest with these bands analysis is to catch the bottoms. When you're so low here, then it's usually a good buy. Again, no financial advice. But here with Apple, it is interesting that we're at a, relative to the trend in the last 20 years, we're at a pretty low valuation. It's kind of interesting, even at these prices. I'm not saying it's going to hold, but with Bitcoin, we're not even close. Sure. Yeah, whatever you want, man. I mean, this is it's I can tell you it's correct what I'm saying. The math is pulling all the way today, but if you want to look at something different, like definitely can look at that. That's all right. Never financial advice. I'm covering CYA, John. I've been through a lot of cycles, guys. I've seen the pumps, I've seen the marketing. It's hard to really get excited about any of that now. I mean, you can definitely moon. You can go 100x on some shit coins, but you could also lose it all the next week. And also, the cool thing about Bitcoin is that there's no other coin that forms this sort of a beautiful trend. I don't have any XRP charts. Maybe I should run an XRP node and get some on-chain data. No, let me know. Shoot me an email if you want to look at it a different way. For sure. I'm happy to adjust. The fact that these pumps have always occurred in November, December is interesting. You know, and also twice we had a double top. We had a double top here, which was lower than the second top. I mean, top in that obviously this was a sort of a peak out. And this was a true double top, which really confused me the last cycle because this was like literally 2 times the same price, about 60, maybe 70 in a day, thousand during the same cycle. So I have no doubt that Bitcoin's going to throw us for a loop again this time. I have no doubt. But the value really I mean, yes, it's dangerous to sell the top, but the value here I think really is when, you know, as I said with Apple, you can buy the bottom. That's the nice thing about these charts. So you come back here, John, when if we've had a puke out of Bitcoin treasury companies that are completely overlevered and getting shorted up the wazoo on Wall Street, you come back here to see where the Bitcoin price trades at. And of course, there's also this general idea that the prior top is a bottom for the next cycle. Actually, 2 cycles back. So, you know, it didn't hit it here in 2018. It would have been the prior top was 1200. It hit only 3000. And then in 2022, the prior top was 20,000. It went below that. It got to 16,000. So people speculate that now this, when we say prior top, it means here that if we puke out again a year from now, year and a half from now, it will be something like 60,000, 70,000. But that's basic, you know, I'm not running real statistics there. That's just simple observations. Yeah, Dominic, I only have them here. It honestly, there's so much changing I do with these on the back end. I don't have them hosted. On my site. I have really just one. I got a lot of tables, some charts on global money supply, and I'm working on putting more. But there's only this one of the general power trend on my website here on log and on log. And I was telling you guys about, you know, how you can see the definition of what the power curve actually means. And here's another beautiful thing about the power curve, by the way, as you look at this table. 60 would be the presumed next bottom, but that's a total rough, because the prior top in 2021 was 60 twice, 65, 70, whatever. I mean, it depends on the day, but it was mostly around 60K. So that's the idea that that's the base for another puking out that occurs a year from now. So, because in the last case, in 2021, we were at 60 and we went back down to the last top before that of 2017, which was 20. And we actually pierced below it. We hit, you know, 15, 16K. So that's the general idea of how Bitcoin seems to be working. Daily hopium. I'm happy to hear that, Roman. But this chart, guys, this table, again, this is another way to look at the power trend. All right, you can see that graphically where the power trend goes out all the way to 2035, 1.8 million. But here's where I talk about, again, the consistency of the trends since 2016. You can see it here. So before 2016, if we only looked at what the trend would do, and again, it was growing crazier, right? Like here, it was moving very fast here in 2010, 2011, because this didn't exist. But these numbers did. All right, so we're going super fast, then leveled out, then fast again. So if you put that graphically, if we're on a 2010 power trend, Bitcoin today would be $5.5 billion. We're not on that trend. 2011 trend, 200 million. We're not on that trend. 2012 trend, 256,000, still off it. 2013, 745. And this means up to, by the way. It's not just that year, but it's always up, cumulative. Cumulative to 2014, all right, million. 2015, 240. You'll notice that current price is not close to these numbers. But if you look from 2016 and then start looking down this column, nothing is unimaginable. 2018 is high, right? Because, of course, we boomed up again in 2017, 150K. 2021 is high, 140K. And 2022, 130K. But, you know, think about what these mean. It just shows you amazing cyclicality. Adoption of Bitcoin according to this curve. Yeah, good question. So institutions, in terms of shorting, which I think is a good way to measure it, that started exactly at the peak in 2017. Right here. It was maybe this day that CME futures started and SIBO futures started in Chicago, which would allow one to easily short Bitcoin. Started precisely there. More institutions, of course, get involved, but ETFs still don't start until here, January 2024. So we move above trend here. And then all the way, other things happen. MicroStrategies comes in here in 2020. Now I have 600,000 Bitcoins. Every other company that's treasuring Bitcoin. And then, of course, exchanges are growing, other institutional adoption. But I would put it here at this precise top, which is another indication why it might not be this blow off top again, right? Because this was the last time we didn't have full Wall Street involved was 2017. But we are fully institutionalized now, I'd say. I mean, we talked to Anthony Scaramucci on our show recently, and I asked him, like, have we reached the day where Bitcoin is like copper or gold or oil, like just another commodity? And he still thought no, which I understand that, because it's true that, like, it's not a must-have for pension funds like Apple is a must-have. But if you just look at the sheer value of it, we're getting very close. And if you should look at the sheer representation of contracts that can be traded in Bitcoin terms, we're also getting very close. That's an evolution from 8 years now, from 2017 until today. So having taken into account all of those things, I would say that argues more for a smoother boom this time. But I'm personally happy to still stay on this idea until it proves wrong. If it proves wrong, then it proves wrong. Could be. Could be. So I stream here, and then I have this show, which I've started in 2017, Crypto Voices podcast. I do a lot of random stuff too. We're talking about Ukraine a lot because it's close to where I live and close to my heart. But we talk about Bitcoin and other tech stuff too. It's not as frequent as these streams, but you can catch that on Spotify. It's on YouTube as well. And then I just go on, shows as well. Some of the other bigger shows in the States, like my buddy Marty's TFTC, I've been on many times. Marty Bent, he's a hardcore Bitcoiner. What Bitcoin did, those types of shows. Another one I haven't shown today, which also shows why I'm not panicked. I'm also not like, I just think it's going to take a long time, is this one, which shows the total value of FedWire transactions. All right, so I just showed this, I think, yesterday, but I'll show it again. Hold on. What do we got here? I think Fred did that on a curve. it will look the same. I mean, it'll just be a very smooth curve, and then you can take a trend line of that. I haven't done it though. I can do it. Yep, could have been what Bitcoin did. Anders. Peter's a good dude. Peter's a good dude. But then just so you see here, again, this is Fedwire. What Fedwire does in value. This is not a stock. This is a flow. All right. So this is 1,158 trillion, $1.1 quadrillion worth of money going through Fedwire. This is base money, the money that the Federal Reserve creates, only the digital portion of it. Because the other portion is the physical. Obviously, it's not going through Fedwire. And if we put Bitcoin on, you can see it way down there. All right. If I take off Fedwire, it looks like this. It has huge bumps due to price spikes. But we're actually really low right now, which is interesting. Had a top in 2022 of 18 trillion, trailing 12 months. Right now, 7.38 trillion. Not that much. If you put Fedwire back and then put a multiple, we used to be millions of times smaller. I don't want to use a Trump negative 1,000%. Obviously, he's a funny guy, isn't he? But no, millions of times. Fedwire is millions of times larger than Bitcoin at the beginning. Now, Fedwire is only 157 times, but still huge, obviously. So again, in my attempts to have people not panic about the asset class, there's no end date. This is going to keep coming. It's going to keep accreting into what the Federal Reserve does. But we got a long way. Long way. If you just think about how difficult it would be to plug everybody out of Fedwire and then into Bitcoin. I'm not saying it's not going to happen. It's going to happen, but it's going to be a more evolved process. And also why I like these bands going back here is let's put the 70th back on. So this is where we are. I already showed this at the top of the show, so forgive me if you're still watching, but we can go back in time. And this relative value, 1.1x the trend, was nothing unusual for Bitcoin to be trading at 1.1x the trend, which we have just dipped back below now that we are at 115. I haven't even checked Bitcoin if we've jumped around. 116 at the moment. Pulled this into the model a couple hours ago, so it was 115, 151. 100%. 100%. I have it right here. Got to find it. Here's gold. Here's Bitcoin. This may prove to be a bit too fast because gold really is. People are catching up to sound money these days. This is the trend of gold. This is the actual gold market cap. The trend is only 12.5 trillion based on the last 15 years of gold performance. 6.2% growth per year. But it's actually 20 trillion at the moment. It's about over 6 billion ounces worth of gold in the world available. it's growing pretty fast at the moment. So this may, you just have to see. It's all about how you start the trend line. This says 10 years to pass gold. Maybe it's a little bit longer. Interesting. It projects passing gold at the value of gold today. So this is kind of a bit weird. And I'd say probably we're going to have to push this back. Gold really had a huge run in the last couple of years. Yeah, it says it will happen actually at 2033 at 19 trillion, which is literally the value today. So that shows you how fast. Like, look at this. I'm keeping these charts very, very simple, so I'm not showing the trend line, but obviously you can see that. So it morphs into trend, right? When I don't have real values to project, you can see that trend from basically a year and a half ago is where gold was sitting at for a long time. Gold went sideways for like 15 years, 12 years. But over the last year and a half, it's just exploded. So it kind of makes this one project out a little bit weird, to be honest, but it is what it is. I'm not doing anything fancy. I'm just keeping the math. But if you compare like treasuries, right, the US national debt, which is 36 trillion at the moment, you'll still pass that by 2040. All right, so let's just look at the Bitcoin market cap, 2.3 trillion at the moment, 2.1 moving into the trend, which is we're even higher than that right now, right? But the trend keeps it at 2.2 trillion, growing at 45% per year and declining. We would catch the value of treasuries of the US national debt somewhere in 2041. Maybe we saw money standard split. Interesting thought. A lot of people like gold. Peter Schiff, he's still on his gold trends. It will be part of the picture. I absolutely agree and believe it will be part of the picture. But Bitcoin has superior qualities that I do think will put it as the apex predator, as they say. But it's also why I'm not a hyper Bitcoiner. And I'll put this one back on again if people haven't seen it. If you see how big this chart is, if you see how many, the scale of this chart versus Bitcoin, right? Like here's Bitcoin. Each dot on this chart is $1 trillion worth of value. Bitcoin's got time to accrete into everything else here. And the main money supply, which really where the action is here. It's a monetary base. So this is only the top 7 currencies, 22.6 trillion. We're 10 times smaller than that at the moment in Bitcoin. And then if you go back to this chart again, let's put the monetary base on without gold. All right, that's here. We're actually way under trend with the monetary base. Only at 26 trillion. Trend is 33 trillion. So we're going to have to wait for Powell to drop those interest rates and print more money to catch the trend. Nonetheless, if we grow at the same trend, which we have been for the past 15 years, Bitcoin will catch it in 2041. 115 trillion total. 115 trillion, 120 trillion. What about asteroids? It's I believe it's 500 trillion is the precious metal value of asteroids in somewhere around our mineable orbit. It's going to take some time, but there are asteroids with plenty of gold that could destroy the world market. But it's a good thought experiment for sure. Also, Bitcoin has offline functionality. You know, if we ever get to a point where mesh networks are ubiquitous, that means like people can, you can sort of transact and move value from device to device or house to house without having to connect online. You got the satellite options. Although satellites are pretty, at the moment, it's Blockstream is renting bandwidth on satellites. So I would not say that a satellite is a foolproof way to do it, but you can connect to the Bitcoin blockchain without the internet, but not without technology, as you say. It's true. You do need technology to function. We'd have to see. We'd have to see. Very true, Tim. Gold is the better Lindy effect. What's it mean, Daniel? Dorsey? I just think it's funny that I track a lot of silver just to see, and people I've tried to grift that asset for a long time. I don't know if you guys remember, like 10, 15 years ago, people thought that because the mining ratio of gold was so, not the mining ratio typically used to be 10 to 1 or 12 to 1. 15 to 1 was the legal ratio, but the mining's a little bit different. Whereas the price, was like 150 to 1, right? Even 15 years ago, it was like $1,000 gold and $3 silver or whatever it was, $7 silver at the time. So everybody thought that silver would go back to that old ratio of 9 to 1, 10 to 1, the mining ratio. And silver was just going to be the best investment ever. And if you had taken that advice back in 2011, instead of buying Bitcoin, you just have literal bags of silver. So there's a lot of grifters for sure. There's a lot of grifters. Yeah. No, for sure. All that can happen. But it is true. Like, as Alvaro was saying, that's still a technology. So you do need technology for Bitcoin to function. But you do not necessarily need the internet, depending on how advanced we go. It could be controlled or verified through space and, with satellite streams and mesh networks, ham radios. Our friend Rodolfo, my friend Rodolfo from CoinKite, he's done plenty of experiments with radio actually making a transaction to a device using only radio signals. So the creativity, there is no end to the creativity in Bitcoin for sure. But you're right, Tim. Gold does have a better Lindy effect. Was Kaiser one of the ones talking about it? He probably was. As you know, I'm not a big fan of Russian imperial sycophants, and he made his money for 15 years or whatever on RT. He deleted like 2,500 tweets saying that Russia was not going to invade Ukraine in 2022. So guys, it's getting long for me. I'm going to get into some other stuff. It's the weekend coming. We got time. We got time. Enjoy the dips. We're still at fair value. I'm sure I'm not going to be the one to predict the top, but hopefully we can all keep calm together as we move forward in this Bitcoin journey. So, with that, I think I'm going to leave you guys. Everybody have a great weekend. 70% of Bitcoin's pricing observations have been below the relative value where we are right now, relative to the trend. And silly season usually starts at 90%. So we got plenty of time. But we're nowhere near, the 10th percentile, which would be a major puking. Bitcoin crashing to 115,000 is hardly a crash for anybody that's been in for a relatively long period of time. So, John, congratulations on the first purchase. Thank you for joining. Thank you, everybody. Great advice, Dominic. Appreciate it. All right, guys. Have a great weekend. Thanks a lot for joining. Shameless plug. No subscriptions, no nothing, but if you have any sats to spare for the research, you can donate right here on my website. Thank you, Daniel. Thank you, Dominic. Take care, guys. Great weekend.